For nearly 80 years, the world has spun on one axis, the US dollar. But right now, that era is shifting beneath our feet. The world's biggest economies are quietly building a financial system that no longer depends on the greenback. Central banks are buying gold at record pace. Oil deals are being done in yuan, and the dollar's dominance is fading faster than any time since World War II. This isn't a rumor, it's data. And today, we're diving into what this Great De-Dollarization really means for you, and 5 assets you can own to protect and grow your wealth as the rules of money get rewritten. For decades, the US dollar was the center of gravity for global trade and finance, but its share of global foreign reserves has fallen from over 70% in the early 2000s to about 58% today, a historic slide. So why now? It comes down to 3 forces colliding at once: geopolitics, debt, and technology. Let's break each one down and see why the shift is accelerating. First, the weaponization of the dollar. When the US and its allies froze Russia's foreign reserves in 2022, every finance minister in the world got the message: your money isn't safe if it can be switched off with a sanction. That moment pushed countries to look for neutral assets, currencies or commodities no single government can control. That fear sparked a race for alternatives, and gold is winning. Second, America's mountain of debt. The U.S. national debt blew past $38 trillion this year, and it's climbing by billions each day. When a nation prints trillions to finance its spending, it devalues its own currency, and foreign creditors notice. For the first time in modern history, foreign buyers are pulling back from U.S. treasuries. They're quietly reducing exposure to a system they no longer fully trust. And third, technology. The BRICS bloc, Brazil, Russia, India, China, South Africa, and new members like Saudi Arabia, is building its own payment networks and digital currencies. Russia and China now settle over 90% of their trade outside the dollar system. Every transaction like that shrinks the dollar's reach just a bit more. This isn't a collapse. It's a gradual rewiring of global finance, one payment at a time.
If you're finding this helpful, make sure to subscribe and turn on notifications.
Each week we unpack how global trends impact your money, so you can stay informed, not intimidated. So, how do you protect yourself in a world where the dollar is losing ground? The answer isn't panic, it's preparation. Let's look at 5 asset classes that smart money is turning to as this transition unfolds. First up, gold. It's the oldest store of value on Earth, and it's back in fashion. Central banks are buying between 750 and 900 tons of gold this year alone, the strongest demand in decades. At around $4,000 an ounce, gold is becoming the foundation of a new financial order, one that doesn't depend on trust in any government. Next, foreign sovereign bonds and currencies. Investors are quietly diversifying into currencies like the Swiss franc and Japanese yen, which historically hold value when others don't. Government bonds from countries with disciplined budgets, think Germany or Switzerland, offer a safer harbor as confidence in U.S. debt erodes. It's not about abandoning the dollar, but about owning a basket of stability in an unstable world. Third, commodities. Energy, food, metals, the stuff civilization runs on. When currencies fall, the price of real things rises. Copper is surging on green energy demand. Uranium is back as nations turn to nuclear power. And agriculture remains the quiet heartbeat of the global economy. A diversified commodity ETF can give you exposure to this real-world value, the antidote to paper money erosion. Fourth, Bitcoin. Think of it as digital gold for a digital age. Its supply is hard-capped at 21 million, and no central bank can print more. In economies facing hyperinflation or capital controls, Bitcoin has already become a lifeline. Yes, it's volatile, but its scarcity and independence make it a core part of the modern debasement trade. Finally, real estate. It's tangible, finite, and essential. Strategic properties and stable economies can serve as both a store of value and an income generator. As the dollar weakens, foreign real estate, especially in countries with strong currencies, can appreciate in dollar terms. Logistics centers, rental housing, and agricultural land all offer steady returns in a world that's craving stability. The age of unquestioned dollar dominance is ending, and a multipolar financial era is taking its place. But that doesn't mean chaos. It means choice. Gold, foreign currencies, commodities, Bitcoin, and strategic real estate offer a roadmap to resilience. The goal isn't to bet against the dollar, it's to prepare for a future where diversification is the new defense. The Great De-Dollarization has begun, but your financial freedom can grow with it. If you found this video useful, hit that like button and subscribe. We release deep dives like this every week. And tell me in the comments, which of these 5 assets do you think is the most promising right now?